I think you mentioned something about avoiding HMRC trouble. If I tell you something, nobody wants to get into hot water with HMRC. Nobody needs that extra headache in their life.
HMRC is just looking at how they can generate as much tax as they can.
It was when I did my self-assessment, it became obvious that I had all this money I'd given to charity, church, different organizations, and I was not claiming it until I did a self-assessment. It amounted to several thousands of pounds. And so I agree with you, sort of like learning about the system, and most times, because of the complexity, having the right professional to help you is important. But I know that at some point that 20% changes to a very interesting figure. At what point is that?
Once your income gets to 100,000,
Yeah.
so in case the total pension is not more than 60,000,
Yes.
then the interest you take tax on it.
Difference between what the church or the charity could have claimed, the 25%, and what band I'm being taxed on. For instance, if I'm being taxed on 40%, I could then claim the difference. Is that what you're saying? I know you said PAYE. For those who don't understand, what's PAYE? What does it practically mean? Can you, just the same way you simply describe a lot of things, what does it mean really? Welcome back to MoneyWise Doctor Podcast, and I'm delighted to have you again. As you know, here we discuss how doctors and healthcare professionals can make smarter financial decisions. Sometimes it's about investment, sometimes about taxes. A lot of times we're talking about changes in the government laws and how it affects you, as well as how to make smart, responsible financial decisions. Today, I've got a special guest in the house. I've actually gone to bring in a proper professional, someone who does numbers and accounting for a living, sort of been working behind the scenes. And sometimes when I'm coming out to create content around accounting or things that are about taxes, I check things with them and they also help me with my taxes. So today, let's make welcome the gentleman Latif, an accountant from AACSL Accountants in Excess. Latif, you're very much welcome.
Thank you so much, Dr. Edwin.
Lovely. Yeah, thank you for taking time out of your busy day to join us. I know you're doing taxes and numbers and all that. Yeah, can you tell us just a little bit about yourself, where you work, what you do, and how long you've been doing it for?
Yeah, my name is Latif. Currently work as an accountant with AACSL Accountants Limited. So I've been with AACSL Accountants for the last 4 years. It's been a wonderful journey.
Wow, a lot can happen in 4 years. I suppose if you look at myself, looking at the UK system, what has happened in the 4 years when it comes to things like personal tax allowance has remained the same, but obviously things like your pension allowance has gone from 40,000 to 60,000. You get all that happening, like the British ISA that has been announced but yet to be implemented, the non-dump tax. I'm sure there's 1,000 other things that you guys have to keep up with. But today we are going to talk about how doctors could be smarter with their taxes, dangers and things to watch out for, and basically how to make smarter tax decisions and put more money in your pocket legally. How does that sound?
That's good. The thing is, about when it comes to tax in UK, it's just getting to know the system properly and getting to understand what to do and what not to do, basically.
Okay.
So as to avoid HMRC's problem as well, that is also important, because as long as we're trying to save the money, we have to ensure that whatever we're doing is legal.
Yes.
In case of an HMRC check, we can present whatever we've done to them and to be certain that what we've done is the right thing.
That's really important. I think you mentioned something about avoiding HMRC trouble. If I tell you something, nobody wants to get into hot water with HMRC. Nobody needs that extra headache in their life. But you're saying that you can actually be able to be tax efficient. You can claim back your money. You can actually avoid overpaying tax while still avoiding HMRC trouble. Is that correct?
Yes, that's correct. There are legal ways with which you can be more tax efficient.
Okay.
When I say legal ways, I mean ways that methods that even HMRC are aware of and they are okay with it. So they don't have any, as long as you have your proof, you have a document to prove, then HMRC is fine with you.
Good. I mean, it's legal ways. Most of my audience are doctors, nurses, healthcare professionals, and we've got a few other finance professionals who join us anyway. And I'm sure they all want to stay on the right side of the law So we want to stay with the legal laws. But just a quick question. You say there are legal ways and HMRC is aware of it. Will HMRC make me aware of it? Would they tell you that these are areas you can claim taxes? Do you think they would inform us to let us know that, look, you're not claiming enough tax relief or you're overpaying taxes?
Normally, HMRC is just looking at how they can generate as much tax as they can.
Fair enough.
So normally, HMRC will not tell you, say you have this money to claim or you're supposed to do this. However, at the end of the tax day, if HMRC believe they've overtaxed you, they tell you, oh, we taxed you by, we've overtaxed you by this amount,
Yes.
we fund you. But they won't come to tell you, oh, if you donated money to charity, come and claim the tax relief on that contribution. HMRC will not tell you that. So that's the reason why you need a professional
Yeah.
to lead you on that journey to let you know, say, this is how to go about this. You've done this one time. We can use it to reduce your tax liability and all that details like that. So if you need a professional, especially in the UK, actually need an accounting professional that can guide you on your finances.
Of course. I mean, why I ask that question, that a lot of doctors and healthcare professionals, an average individual, they're not really aware that they could be legally entitled to some tax relief or things like that. I mean, in my own experience, I think it was when I did my self-assessment, it became obvious that I had all this money I'd given to charity, church, different organizations, and I was not claiming it until I did a self-assessment. It amounted to several thousands of pounds. And so I agree with you, sort of like learning about the system, and most times, because of the complexity, having the right professional to help you is important. But we'll come to that. First of all, let's delve into tax and tax mistakes. But we'll start with the basic stuff, because some people listening also are sort of like doctors. We deal with our daily activities and all that. Tax is not what we deal with daily. When we say HMRC, we're talking about HMRC. Let's assume that we don't know what HMRC. Who are HMRC? Just in simple terms, we don't need to know what the acronym, but what do they do? Who are they? Who are these big bosses, HMRC?
So basically, HMRC is just a body, a government body that is responsible for the tax system in the UK.
Yes.
So they are basically responsible for collecting the tax from the UK residents, from the company as well. So that's just in simple terms.
I think I like it like that. Just keep it simple. It's Her Majesty's Revenue Commission, but what they do, like, they're the tax people, and they decide how much taxes you pay. If you've overpaid, you pay the taxes to them, and they are very powerful. They can get into any account they want, and they can actually get any information they want. So we don't want to mess with them, but at the same time, we don't want to overpay taxes, and that's why we've got you here, Latif. All right. So now, going into taxes and details, when it comes to UK, I want to start with what are sort of like the tax bands. How much do I have to earn before I start paying tax, and at different levels, how much tax do I have to pay? I'll give you an example. As a doctor, let's say a junior doctor who is earning, I'll give a rough example. Let's say 40,000, maybe a bit more, but let's just start with 40,000. How did they start paying tax? Where did they start paying tax?
Okay. Thanks for that. Basically, the way the UK personal tax system works is that you have a personal allowance.
Okay.
The basic thing everybody knows. Oh, I have a personal allowance. But what's that personal allowance? So the personal allowance is just the amount of money that when you earn up to that amount,
yes,
you do not have to pay tax. That's just what the personal allowance is. So currently, the personal allowance is set at £12,570.
Okay.
So what it means is in a year. So I would just digress a bit. When I say a year, I'm talking about the tax year. And the tax year starts from 6th of April.
Yes.
Of the current year till the 5th of April of the following year.
Okay.
So in a tax year, as an individual working in the UK, a UK resident, you have a personal allowance of 12,570. So meaning within the tax year, if you earn just £12,570,
yes,
you do not have to pay tax on that 12,570.
Yes.
However, once your income crosses that 12,570, even if it is just by £1,
Yes.
then HMRC start chasing you. You have to pay your tax.
You have to pay tax. Thank you. That's a very, very clear explanation. But you highlighted a very important point there that I want to bring out. The tax in UK, and most times you're an expert in your field, so it's easy for experts to assume that other people know these things. Most people don't know that the tax is not January to December. Some people think the tax is January to December, but it's quite important to know it's from April 6th. That's the tax year, the beginning of the tax year, and April 5 is the end of the tax year. So you're saying that if for instance, I did my master's, I was a student at some point, if for the whole year all my income was 12,570 for any reason, whether it's because as a company director that was my salary, or because I worked only minimum wage jobs and I was working part-time, if I earn 12,570 or less than that, then I'm not liable to tax. Is that correct?
Yes, that's correct. As long as the total personal income for the year is not
Yes.
more than 12,570,
Yes.
you do not have to pay any tax on that income. Tax on the income.
That's useful to know. Now let's go to the next level. Let's say, okay, this junior doctor is earning more than 12,570. Let's say she's just starting her training, and she's earning £40,000. Junior doctor, and a lot of times say junior doctor, but most junior doctors actually like been doctors for many years. And let's say he's earning £40,000. So for the first £12,570, it's totally tax free, but they're going to have to pay tax on the rest of the money. Is that correct?
Yes, that's correct. So basically, the first 12,570 you earn in the tax year is tax free. That is, you pay 0% tax on that. Then from the 12,571 up until 50,270, so that's about 37,000.
Yes.
You pay tax at 20% on that
Right.
income.
So that 20% is the basic. Is the one they call basic?
Rate.
Okay.
That's a basic rate.
That's a basic rate. That makes sense. So you start with 0% for 12,570 for all your income, because I'm reminded when you say all, it means whether you had rental property income, whether you were paid something, whether you had a side hustle and all that stuff, you got dividend. If it's less than 12,570, no tax. Then everything from above 12,570, you pay 20%. But I know that at some point that 20% changes to a very interesting figure. At what point is that?
Yeah, that's correct. So once your income in a year
Yes.
is above £50,270,
then
anything above that, you start paying the tax at 40%. So tax on that at 40%, and until the income gets to about 125,140.
Yes.
So on up to 125,140, then you pay tax at 40%. And once you cross that threshold of 125,140, then your tax increases to 45%. So that is the higher rate. That's the additional rate, And okay, yeah,
I'm just going to interrupt you a little bit. Latif, the way you fling numbers, I know accountants like numbers, but let's slow the roll because we want to understand it basically. So I start with 0%. If I'm earning 12,570, fair enough. 0%, 12,570 is not a lot of money. Then at 50,000, that's the magic number, 50,270. I swing into between 12,570 to 50,000. I'm just going to use 50,000. It's still 20% tax, but only after you remove the 12,570. But then once I cross that magic number, 50,000, then suddenly doubles. It goes from 20% to 40%. So does that mean that if I get a promotion, or if I start earning a bit more, or let's say I get dividends and I just cross 50,270, whatever I earn above that level is going to be taxed at 40%? Is that what you're saying?
Yeah, anything you earn above 50,270 will be taxed at 40%. But just to add this, it does not mean if you are earning say 50,000, let's say you're earning 51,000, it does not mean the whole 51,000 will be taxed at 40%.
Exactly.
It is at a level. So what happens is from the 50,000, 51,000, which I'm using as an example here, you take out the 12,570, you're not paying tax on that.
Yes.
between 12,571 to
Y-
50,270, which is about 37,750.
Roughly 20%.
Roughly the amount. Then you pay 20% on that.
Yes.
Then the difference between the 50,270 and the 51,000 pounds, which is about 730 pounds, that is it is on that you pay the tax of 40%.
Thank you for clarifying that. You know, there's a lot of misconception. I've seen someone who wrote a post on a very popular Nigerian blog to say, "Oh, I was promoted and then my income dropped," and then they gave some. You know, people didn't understand this thing. They thought that the whole 40% is taxed, but it's actually the extra on top of it. Okay, now we've moved from no tax to basic rate tax, which is 20%. Now we've moved to higher rate tax, which is 40%. Now you were going somewhere and I had to slow you down a little bit. I know like this is a trap now where some consultants, GPs, and some really senior, NHS professionals have found themselves. So you're saying that okay, this 40% is not the end of it. If you get to 125,140 for ease of calculation, I'll say one for ease of saying, I'll say 125,000 above that rate. You then launch into what they call the additional tax rate layer, which is how much? What percentage?
5%.
45%.
45%.
So it seems like the biggest jump was just from the middle, like going from basic 20% to the higher one, which is 40%. Because 40 and 45%, I mean 5% is big, but the big jump was from basic to higher. Would you agree?
I will not agree. How will I put it down on paper?
Okay.
5% increment.
Okay.
However, there's another thing you need to consider.
Okay.
Because once your income gets to 100,000,
yes,
then don't forget that personal allowance that will be saying, no, you earn 570, it should not be taxed. Once your income gets to 100,000,
yeah,
you start losing your personal allowance.
Aha, so this is a big one for a lot of doctors, healthcare professionals, everybody in above 100,000. So is that the 60% tax trap, the horrible 60% tax trap?
There is no 50% tax rate according to HMRC. However, when you do the math, it is almost getting to the amount if you're earning above the 125,000. Because if you're in, I'm not saying.
I was going to ask you, are you qualified as both as an accountant and as a lawyer as well? But I agree with you.
The UK tax, you also have to know the legal part of it because it's all transfer.
Yeah, but carry on.
The 60% tax trap is just a concept that people have come to develop, which, if you look at it, it is actually correct.
Okay.
Because once there's something called the effective tax rate.
Yes.
So by the time you look at the effective tax rate on let's say you're earning 200,000, for example.
Yes.
But when you look at the effective tax rate, that is how much exactly has been deducted as tax from this income.
Yeah.
It will be close to that 60%. So that's why people just have that quote and say 60% tax. However, to HMRC is not charging 60%. What HMRC has charged you is 0% for the 570, 20% for the basic rate, 40%, and then 5%. That is all HMRC knows.
That is fair enough. I don't expect to go to hmrc.gov.uk and see a 60% tax rate, but you've summarized it with effective tax rate compared to my neighbor, compared to my colleague in UK, who is getting the tax allowance, the 12,570. My effective tax rate suddenly goes up and it works out at 60% for those between 100,000 and 125,140.
100,000, because the way the personal allowance goes is once your income gets to 100,000.
Yes.
So for every £2 you earn,
yes,
your income goes by £1.
Yes.
I mean, if you earn £2,
yes,
use £1 of your 12,570.
Just to stress it, sorry to cut in. So once you cross 100,000 or whatever the exact figure is, for every extra £2 you earn above 100,000, you lose £1 of that 12,570 personal tax allowance that was tax free. So you now have to pay tax on that as well, probably at the higher rates as well.
Yeah. So what that means is the £1 that you've lost from the personal allowance, you have to pay tax on that £1 of your 12,570. So They add it back to your taxable income.
Oh.
So in this case, for every £2, you lose £1, and by the time you get to about 125,000, then you don't have any personal allowance left. So what that means is all the money you earn for that year, each and every penny of it will be taxed because you've lost your personal allowance. You have to pay the tax, unfortunately, since you've lost the personal allowance.
I mean, that sounds. I've seen people, and believe it or not, whether we could discuss about whether they're good with budgeting and planning or whatever. But I've seen people earning 100,000, and they're not rich. They're just sort of like working hard. They're earning above 100,000. Maybe they earn 105,000 because in their salary job they earn 70,000, and then they did some extra locum, and maybe they got some other extra income from their side hustles, and they think they're just trying to make all ends meet. They think they've paid their taxes, and suddenly they get a letter from HMRC, the notorious brown envelope, to say, hey, you owe us money. And then they start sort of running helter skelter, probably reach out to people like us on MoneyWise Doctor or people like you in AACS and accountant to ask for advice. Hopefully they reach out to someone who knows what they're talking about. Hopefully you guys. And then they suddenly find themselves owing all this money in taxes because whatever they earned before that was tax-free has been pushed into, the taxable income, which further pushes more money into the 45% and pushes like other money that could have been 20%. So basically, it's like, should we just make sure that we don't earn a lot of money, or do your best to make sure you don't earn any money at all? Don't work too hard, work a day or 2 a week. What would you suggest? Let's say a neurosurgeon or even just a GP or a junior doctor or a nurse. Maybe they've got a rental property and it all goes into their income. Would you say, okay, just be lazy, don't work too hard?
One thing is certain, I'm sure we all want more money. So unless we don't work for money.
Well, I don't know if everybody wants more money. Maybe some people just want more peace and they want the world to be a better place.
That's it. I won't say stop working.
Okay.
To be honest, we actually need we need more doctors.
Okay.
So we can easily reach out to the NHS and
Fair enough.
So I won't say stop working. If you can work in a year, earn above the 100,000 and still not even avoid the additional tax rate, which is the 45%.
And you can do that legally.
Legally.
Okay, good.
So the UK tax system, fine, the rates, we believe the rate is high, the tax rate is high.
Yes.
However, there are also some things that the government has put in place with which you can use to reduce your tax.
Okay. I'm sure we're going to get into the meat of those things, because those are where we now get into a specialist area which is why someone like me, I've maintained the relationship with accountants for almost, I'll say, all my working life as a doctor, basically, especially in the UK. I'll say whatever fees I've paid to an accountant, I see it as a massive returns on investment for me, basically, because of the ad. And that's not because you're my podcast, obviously. Most people as an accountant know these things. But let's go into all that detail. So you could earn above 100,000 and avoid the 60% tax trap. How?
Yeah, there's something called tax relief.
Oh, okay.
So tax relief, it just means, it's, in a simple term, you are getting a relief from tax. So it's not like you are not paying the tax you're supposed to pay.
Yes.
So, however, usually the tax relief are legal.
They are all legal.
They are legal. There are ways there are some things that you do which we'll be getting into. An example of that is the pension.
Okay.
So you can contribute into a pension scheme.
Okay.
And get a relief from the pension scheme.
Okay.
Now, the way the pension works is, once you contribute any money to the pension,
okay,
depending on your employer and the scheme, the pension scheme that your employer is registered for.
Yes.
In some cases, they deduct the pension after your income has been taxed.
Okay.
So if you are earning £1,000, your employer taxed the £1,000 to pay into HMRC.
Okay.
And let's say, just as an example, let's say on the £1,000 you pay £200 as tax.
Okay.
To HMRC. Then the balance of the balance £800, your employer deducts pension from that.
Yeah.
As an example,
Okay.
deducts £100 and pay that £100 to the pension provider.
Okay.
Employer also adds their own contribution, which is the employer contribution,
Yes.
to the pension provider pot, to the pension pot, to your pension pot.
Lively. Okay,
Yeah.
Latif, I think basically because a lot of doctors work for the NHS. What you're describing is defined contribution pension, where people sort of like pay into their pension and they deduct it. A lot of people on the NHS pension are defined benefit, where they contribute and the employer contributes, and obviously there's tax relief as well in both cases. But how about, let's say I work in the NHS, I have an NHS pension, and I then want to have a private pension as well, not my workplace pension, something like a SIP, like my
Yeah.
self-invested personal pension. Do I also get tax relief from it as well?
Yes, you get tax relief on that as well. If you contribute to a private pension, you still get tax relief on that. However, you need to be mindful of the pension allowance.
How much is that?
So currently, it is £60,000 as for
Yes.
the 2024-25 tax year. So you can, what that means is your pension pot, all the money that goes into your pension pot should not be more than £60,000 for the year. As
Okay.
long as it is below £60,000, when I say all the money, that's the total pension. It is not just the one that you are putting into it.
Okay.
Your contribution as the employee of the organization or private pension, whichever pension you're using, your employer's contribution that goes into your pension pot.
Yes.
If a family member or anybody just drops money into your pension pot, any money that goes into your pension pot should not be more than the allowance for the year.
Oh, okay. Well, let's make it very practical now. Let's say I'm a GP and I work in a GP surgery, or let's say I'm a hospital consultant and I get a salary and the NHS pays into my pension, so there's the pension coming from the NHS. But also I work part-time as a private practitioner for, let's say, private healthcare, like Northfield or wherever. I go there and I do procedures and they pay me, but they also put some money in my pension. And then also because I want to have a healthy pension pot and I don't want to take chances and depend only on my employer, I also have a private pension, let's say a SIP, and I put some extra money in that pension. So what you're saying is that all of this together in a year, again, tax year, right? In a tax year, April to April, in a tax year, as long as it doesn't exceed, I know it used to be 40,000, as long as it doesn't exceed 60,000, then I can get tax relief. So I don't have to pay taxes on that amount, that 60,000 or whatever I can put. It's not a must, you must get 60,000. Is that correct?
Yes, but just to get right for that, on the as long as it is not up to 60,000,
Yes.
you get tax relief. It does not mean you don't have to pay tax because obviously your employer would have deducted tax.
Okay.
Don't forget, especially for private pension.
Okay.
You work for someone,
Yes.
has taxed you, paid you whatever is left after tax and other deductions.
Yes.
Then you take out of that money again, the money that has been taxed already, you add it to a private pension. So what
Okay.
you already pay tax on it.
Yeah.
However, the relief, you will still be able to claim that relief. As long as it is not more than the personal allowance, then you can do a tax return to claim the additional relief on the pension, on the private pension that you contributed.
Oh, I see. So because my employer was automatically taking out my tax, they didn't know I contributed money
the
for
private
pension.
pension.
Yeah, private pension. So the way for me to get it back would be to do a self-assessment to get a return, to be able to declare that I paid this extra money in taxes and to be able to get it back. Is that correct?
That's correct.
Right.
So
Okay.
You claim it back on your tax return.
Tax return, very important. I'm going to come back to self-assessment because I think it's really quite important. A lot of people miss out self-assessment, so I'm going to come back to that. But first, let's look at other relief. We did it.
Before we move on from pension, just to add, so
Yes.
in case the total pension is not more than 60,000,
Yes.
then the excess you pay tax on it. And
Oh.
also, the 60,000 allowance, at the point it starts reducing as well.
Oh, okay.
So once your income is above 200,000 for the year, then you have to, you will need to, it is better to speak to an accountant to help you look at what your pension allowance for the year will be.
it's all very,
Not to.
it's
So
all
I'll
very,
continue.
it's all very complex and
Yes,
quite,
to enhance your income, I use 200,000 to be safe because once it is getting there, then it is better to speak to an accountant so they can calculate what your pension allowance will be for the year. So you don't think it is 60,000, you keep contributing and then they tell you no, it is not that.
yeah. Well, I can tell you for free. I don't know about the rest of the audience, but most of the people I know in the audience, they're not worried about contributing more than 60,000. And if you're contributing, if you're worried about contributing more than 60,000 to your pension, chat us in the comment, in the YouTube comments, and let us know what you're doing and how you're managing. But when we say 60,000, just for the audience, it doesn't mean you have to contribute 60,000. I end up doing 5,000 or 10,000, but whatever you do, your private pension, you should get a tax relief on it. And how you claim that, especially if you're working as an employee somewhere, will be doing a self-assessment or tax return. All right, going back to tax relief, for those who have been following this channel, we've got like a free book, a free downloadable guide you can go and download. It's basically how you can get tax relief on professional expenses. We'll put it somewhere in the link in the description. You can download that. But I want to ask the expert here, tax relief. Let's say, use me as an example. Let's say I'm a doctor and I'm working in an NHS hospital. Apart from pension, because some people think, well, I've got NHS pension for now. What else can I get tax relief on? Let's say professional expenses.
Yes, you can get on professional expenses. However, before we talk about that, there is this tax relief that people take for granted, especially with coming from, let me say, from Africa.
Yes.
Like charity. When we do, back home we pay to our mosque, we pay to our church, and that's just it. That's the end of the money.
Yeah.
However, here in the UK, when you donate money to your church or your mosque, especially if they are registered as a charity in the UK,
Yes.
not just your church or your mosque, any charity that is
Yep.
registered in the UK.
So like if I donate to Red Cross, the local kitchen, and any sort of charity, including church, mosque, NGO, as long as they are UK registered, if I donate money to that charity, they qualify for relief?
Yes, as long as they are registered as a charity with the Charity Commission or in Scotland, as long as they're a registered charity in the UK, then you can claim a tax relief from that money. So the way that works is if you don't, and to be honest, there are some people that will tell you, I've talked to some clients where I tell them, see, the money you donated to your church, you can actually claim a relief on it.
Yes.
Like, oh, no, don't bring it to the church.
Yes.
The church, the way it works is this: if I donate £1 to the church,
okay,
the church will go to HMRC,
okay,
20%,
okay,
as there's something called gift aid.
Gift aid, yes.
20% of that £1 from the HMRC.
Okay.
Now, the reason for that is because don't forget the £1 I donated to the church, my employer has already deducted tax on that money before
yes,
that £1.
Yes.
So the tax that I have paid on that £1 is what the church has gone back to HMRC to collect. Now, if my income is say 50,000 for the year, don't forget that means I'm paying tax at 20%.
Yes.
So that way, I can't. All the tax I've paid, the church has claimed everything back. So there's nothing left for me. So that way, you can't claim tax on such because you are a big retainer. However, if I'm a high retainer, let's say I'm paying tax at 40%.
Yes.
The church has only taken, sorry, just to correct what I said, like it's 25%, the church retains 25%.
25%, okay.
Yes. So the church has already gone ahead to came out and say, oh, what you donated money to us, you donated £1.
Yeah.
Will be 25% tax he has paid.
Yes.
Now, I've contributed, I actually paid tax of 40% on that money.
Okay.
The church has claimed 25%.
Okay.
There's something less. That money that is left is what I can claim on my tax return as a tax relief.
Oh, so the difference between what the church or the charity could have claimed, the 25%, and what band I'm being taxed on. For instance, if I'm being taxed on 40%, I could then claim the difference. Is that what you're saying?
Yes, but usually it's usually 20% that I can go back to on my tax return and go back to HMRC
and claim. This is too much maths, and again, that's part of why I think.
Don't worry about the number. What you just need to know is this: as long as your income is more than 50,270 in a year,
Okay.
and you contribute money to a charity that is
Okay.
registered in the UK,
Okay.
you are eligible to get tax relief on that money that you have donated to the charity.
All right. Okay, Latif, I'm
Because,
going to ask you a key question here. Sorry to jump in, because we've got like people from our audience who are from different countries. We have people from Pakistan, Nigeria, India, multiple countries, and we have people from the UK who was born here as well. And some people ask, what if I give money to somebody, or like, let's say I send money back home to somebody who is struggling, and it's all charity, right? Can I claim it as well? Am I able to claim it?
yeah, it is charity, as you said. However, for HMRC purpose, for tax relief, it is not a charity. The money has to go to a UK registered charity, not just previously it used to be charity in the EU or since Brexit. So it has to be a charity that is registered in the UK. That is very important.
Right.
As we said earlier, some people will tell you I donated money back home. We've seen several people they donate a lot of money back home. However, that money will not qualify just because it is not a UK registered charity. And also to note, you need to keep record of those donations.
Yes.
What I do advise our clients is that the donation should be coming from their bank account.
Okay.
Because that way you have a track record of
Yes.
the money actually going to the charity. So it is better. Some people will tell you, oh, no, I just go to church, I just give them 20 pounds today, £100 tomorrow. Just as I say, the best thing is get what's it called? Do it from your bank account.
Okay.
If any money you want to donate, do it from your bank account.
So there's a paper trail for you. You can do good and still do well. Just because you're giving to charity doesn't mean you shouldn't be also task wise about it. So you can do. Thankfully, due to COVID, a lot of people now give online, and I know we have. I remember 4 or 5 years ago when I was doing my self-assessment, and then you guys thankfully helped me with it, and it came out that there were several thousands, not just to local charities, Salvation Army and the rest of them, but also to religious bodies and other places where we had supported and we didn't claim any taxes on it. So, but the most important thing is that it's got to be a UK registered charity, and that way you can claim tax relief on it. Okay, that's nice. Now, that's one way. We've talked about pensions, we've talked about charity. Now, the next one, obviously, I'll say one big one, which is the one that a lot of us hear about, but not everyone claims, is professional expenses. I think we know a little bit about that one. But tell us, what do you think? What can I claim as a doctor or nurse?
Yeah, as a medical doctor or as a nurse, there are some professional expenses that you can claim on your tax return as an expense. So
Okay.
what those expenses do, they reduce your taxable income. So if
Okay.
you earned 100,000 in a year and you paid £1,000 as an allowable professional expense,
Okay.
then you can use it. So that means your taxable income for that year will be 99,000 instead of 100,000. So for medical practitioners, the common professional expenses that you can claim include your subscription. Basically, let me just use this thing. Let me just use sentence. As long as the money you are paying, you must make that payment to be able to do your job.
I like the way you put it simply.
Yeah, just like your GMC, there's no way a doctor will be in the UK practicing in the UK and you do not have a GMC subscription.
Right. So it must be that for you to be able to claim this money, you require that stuff to do your job. Without it, you can't do your job. Is that what they say? Things like wholly, exclusively for your job? Is that
Exactly, required and necessary. So
yeah.
as long as that professional expense, you need it to be able to do your job, then you can claim it as an expense on your tax return.
I like how simple.
Yeah, such as your GMC, for example, you have to pay GMC.
Okay.
You
have to. And we pay a lot of money to GMC. GMC has had thousands of pounds from my pocket. Well, it's about 400 and something now. Okay, GMC, General Medical Council. I believe Nursing Council as well. Physiotherapists, whatever your council. And then what else?
For the GMC, they have to claim that your proportional indemnity insurance.
Okay.
Especially Another thing you need to note is these expenses, if you are claiming them from HMRC, then it should mean that your employer has not refunded you.
Okay, so you can't claim what has been refunded already.
Exactly, because there are some employers that will refund you maybe your GMC, your subscription. So
Yeah,
you can't, or in fact, in some cases, some employer will be the one to make the payment for you.
I
So
like
you can't claim that as an expense. The employer has given you the money, so that's it.
I like how you're
And
going into all this sort of things that could actually nuance issues that could cause problems, because someone can say, I'm going to claim my GMC, but the employer has refunded them. That way it's like double tax relief,
yeah,
isn't it? Yeah,
so
okay.
when the HMRC comes knocking, they tell you, oh, your employer has paid you this money.
Oh, you don't
So
want
that's
HMRC to knock on your door.
so you can claim your indemnity insurance as well.
Okay. There's the Royal Colleges, for instance, member of Royal College of GPs, RCGP, RCGP. So you claim Royal College of GP, Royal College of Surgeons, all those ones as well. You can claim. How about if I buy a stethoscope or replace my stethoscope? Can I claim that as well?
It depends. There are some equipment that your employer is supposed to provide this equipment for you.
Yes.
So however, if in your contract, if your employer, if you are the one that is supposed to provide such equipment,
Yes.
then you might be able to claim it as an expense.
Okay.
And also, training. I know very how doctors like your training all the time. You might be able to claim your training depending on some factors.
Training. You mean like if I attend a course or training program and all that? Okay.
You can claim some training depending on some conditions. The major one is, there's like a GP training, for example.
Okay.
The contract of employment will require you to do some trainings.
Okay.
For you to proceed in that job.
Yes.
So it's just like if I want to work for you now and you tell me, oh, let's say if you must do this training.
Yes.
If you do not do this training, after 1 year, that's the end of the job for you.
Yeah.
So that training, that means you as my employer, you have made it mandatory for me to do that training.
Okay.
You are not refunding me the cost of doing the training.
Exactly.
So in that case, I can claim back the cost of that training as an expense on my tax account.
Okay.
Because it is required for me to do the job, and it is compulsory for me to be able to continue doing that job.
Okay.
But when we are saying training, it does not mean you go and do masters in something and now saying you want to claim it. That is out of it. These are just professional training basically that are actually required for the job.
So if I go away and do an MBA in healthcare, I'm not gonna get refunded.
Anything can change in the future. Probably can invite the rule and say, oh, you can claim, but until now,
No.
also not allowed you to claim that.
Okay. So let's say again, I think HMRC says, even though you define it in a very simple way that most people understand, but HMRC, they use terms like it must be wholly, exclusively for your job, and it must be reasonable, right? Necessary and reasonable. So you can't say I bought a jet so that I can be able to get to work on time, or because I have to work somewhere else. I bought a flying boat. I work in Cornwall and Devon, so I can just zoom off. It must be reasonable.
You can buy a jet. HMRC will just tell you your employer is already paying you for this, so that's what they're paying you for. So you
can't claim it as expense. But who determines what is reasonable? What does HMRC consider as reasonable?
To be honest, the word reasonable is relative.
Okay.
To you, it can you might spend 100,000 on a stethoscope.
Okay, the world's best executive stethoscope.
And to you, it might be reasonable now. Oh, this equipment to do this, to do that. That's why I spend that money.
Yes.
Then HMRC can come and tell you, why you buy a stethoscope of 100,000 when you can buy one for £3,000?
Yes.
So in that case, here it is reasonable.
Okay.
But to HMRC, which is like I won't say the final authority, because you can still
challenge it in court. Yeah.
So to HMRC, it is not reasonable. So it is relative.
It is relative.
To me, it can be reasonable. To you, it might not be. But we just have to, as an accountant, what we just do is we look at it and look at, say, this thing, you want to claim this £1,000 on this. is it reasonable? Before we ask you the question as well, like, do you think? And we also look at, then we combine our ideas and then advise, oh, no, why not, instead of going for this one, why not go for something that is actually reasonable, that even if HMRC come and you tell them this is what I've done, this is this, it will be also be reasonable to them as well.
Yeah, that makes a lot of
It's
sense.
actually related to them.
That makes a lot of sense. I'm aware, because you guys look after us and you look after many doctors, nurses, healthcare professionals. I'm aware of other physiotherapists who also use your service at ASCSL. I feel like sometimes when I want to make a purchase, and I'm thinking it's reasonable, not something that I document. Everybody knows you can claim GMC, MDDUS, you can claim your Royal College BMA fees and all that. People, you can claim mileage as well, but there are things that sometimes are like replacing a stethoscope, you can claim. Sometimes there are things that are sort of like in the middle. And I know, based on your wealth of experience and the thousands of doctors your team deals with, I'm usually able to pick up the phone, speak to somebody, and then because you've seen this stuff before, you're able to say, oh yeah, this sounds reasonable. The other time, this doesn't sound. Another time, I'll think, well, if my accountant thinks this is not reasonable, most times I wouldn't usually proceed, especially because I'm thinking, well, if you've seen so many people, you've done many tax returns, and this is what you do for day to day, then I'm not just going to discount that expert advice. But that leads me into the next segment, basically. How do we claim these things? I mean, tax relief, most people, those have downloaded our guide from our website. You can go into HMRC website, if you watch our video, there's a step-by-step screenshot, but that's for simple, straightforward tax relief, and you can claim more than £2,500 per tax year. But for some people, they do need actually to do self-assessment. I'd imagine that's what you're saying. To when you say tax return, you need to do self-assessment, especially if you are earning some, above 100,000 or some issues. So my question actually is, who are those people? Who needs to do a self-assessment? I know I'm one of those people, but who else? I know I've always had to do self-assessment for many years because of maybe differences of income. But who, the doctor, nurse, healthcare, even any individual, who actually needs to do a self-assessment as opposed to just having your employer pay your tax? Who needs to do that?
Yes, self-assessment. I think I would just quickly say what do you mean by self-assessment?
Okay.
So basically, it is just a system by which HMRC uses to collect tax from the UK resident. So
to collect more? I thought I was doing it to get some more, but
no, not to collect more. There are some people that they don't even pay tax on their income, like someone who is self-employed, for example.
okay.
At the end of the year, such person needs to submit a tax return to tell HMRC, this is what I have been.
That makes
These are my
sense.
expenses. This is my profit. Based on this profit, this is the amount of tax I'm paying.
Like a plumber or maybe a taxi driver now.
Exactly. In fact, there are some medical doctors as well that work as self-employed.
Yes, self-employed.
So
they have to do self-assessment. Okay.
So basically, for the self-assessment, there are several conditions that if you meet one or two of them, then you need to do self-assessment.
Okay.
Normally, if you are an employee, that is, you work for an employer,
yes,
and your income, your employer deduct tax and NI because they pay you.
yes,
normally you won't be needing to submit a tax return.
Okay.
However, once your income previously, once in the last tax year, last two tax years, once your income is above 100,000, your PAYE income, if that is the only money you're earning during the tax year is just PAYE.
Yeah.
Once the income is above 100,000, then you now as a last two tax year. I'm not going to be calling tax year.
Let me just jump in. I know you said PAYE. For those who don't understand, what's PAYE? What does it practically mean? Can you just the same way you simply describe a lot of things? What does it mean really?
Yeah. So when we say PAYE, it means pay as you earn.
Okay.
So it is a tax system whereby you pay tax. It's just pay as you earn. So
okay.
As you're earning the money, you are paying the tax.
What does it practically mean for me? Let's say I'm inside, let's say I'm working in a hospital. Does it mean I don't have to pay the tax by myself? It's deducted by my employer compared to a limited company or self-assessment and all that?
Okay, so the PAYE is basically you have an employer
that
deducts tax and NI from the pay.
Okay.
If you work for say £1,000, for example, and
Okay.
your employer deduct £200 as tax and NI and pay you the difference, which is £800, then
Okay.
that means you are working under the PAYE system.
I see.
So now going by PAYE, you work with an employer, the employer deduct tax and NI before they pay you. Once that if that is how your employer is paying you, then it means that your employer is you are under the PAYE scheme.
Right. So once your employer deducts your tax, you don't have to do any of these things. As long as you have one source of income, your life is simple. You don't have rental or dividend income. Your employer just deducts it. That's PAYE. But what you're saying now is that even if you're PAYE, but your income then crosses 100,000, then you need to do self-assessment. Is that correct?
Yes and no. Reason is
Okay.
because
What's the no part?
100,000 is for I think last two tax year it has been increased.
Okay.
So
How much?
currently, if your income is above 100,000, then you do
Okay.
not need to do. If it is between 100,000 and 150,000, then you do not need to do tax return. But once it is above 150,000, then you need to submit a tax return.
Oh.
However, we still advise
Okay.
that if once your income is above 100,000, we still advise, even if it is 120, 110, we still advise that you submit the tax return. Reason being that because of that personal allowance, as we discussed earlier.
Back to that 60% tax rate. Yeah.
Exactly. So
So
it is still advisable.
So
So
if
yes,
you, yeah, I didn't realize. I think it was when I was sending the last week's newsletter that I realized it's now 150,000. It used to be 100,000, and I think that newsletter was sort of like stated number of the reasons why you might need to do self-assessment. And obviously you mentioned 150k, which is nice, it's generous, but it sounds like to me like if you end above 100,000, you're not doing self-assessment, you might be shooting yourself in the foot. I mean, you might be indirectly overpaying taxes without knowing or without even having an idea. Maybe you just don't want to do the paperwork, but it's costing you thousands of pounds. Is that what you're saying effectively?
it is possible. You know, the good thing about the UK tax system is that if you overpay, especially under the PAYE scheme, if you overpay tax,
Yes.
the HMRC sends you a letter to tell you, say, you overpay tax and they refund you. However, it is still better if your income is above 100,000. It is better to do the calculation just to see, are you in HMRC tax? Is HMRC, have you paid the right tax basically? And also, if you have expenses like your professional expenses, your charity donations, if you contributed to pension, so you can add them on your tax return to reduce the tax. I don't know this. So we still advise, even if, as long as the income is above 100,000, we still
Yes.
advise that you submit the tax return, although you are not legally required anymore.
You're not legally required. I understand that, but I've had a friend who, very hardworking, brilliant obstetrician and gynecologist in London, and thought they were paying their taxes, and then after some years, out of the blues, they got a letter from HMRC to say you're owing us £20,000 or different things, and so this whole idea of relying on HMRC, I'm sure they're brilliant in HMRC, but rule one, money wise doctor rule one is that you're in charge of your own finances. You need to be in charge of your finances. You can't just rely on somebody. And even if I hire an accountant, financial advisor, whatever, insurance advisor, they are all sort of part of my team, but I'm the one who's responsible. So this whole idea of waiting for HMRC to determine, oh, you've been a good boy, you're owing us some tax, we are owing you, I don't quite buy it, because I've seen a lot of people fall into these costly mistakes where years later, maybe when they're actually needing the money, they're suddenly getting this frightful letter from HMRC saying, look, dude, you're owing us this thousands of money, and then they're trying to make a payment plan. Have you ever witnessed that sort of thing? Okay, that's a funny question to ask an accountant, saying that's what you do day to day.
Yeah, the thing is, it is not actually HMRC's fault because
Of course, it's not their fault.
HMRC is not the one deducting tax from you.
Okay. Yes.
So usually what happens is at the end of the year, what HMRC does at the end of the year is to see your employer have they deducted the right amount of tax.
Okay.
Now, in some cases, your employer, there's something called tax code.
Yes, I know the tax code. Okay, another source of confusion.
Tax, no, not really. Tax code
Well,
is
not for you, not for you as an accountant. It's a source of
yeah.
commission for a lot of
I
doctors.
also understand. Yeah, absolutely. Tax code is just like it's just like an information that HMRC is passing to your employer to
Okay.
tell your employer that this is the amount of tax that you should deduct from this person's income.
Okay.
In some cases, uh, your employer might not apply the correct tax code
Oh,
to
I
your
see.
income. So let's say you are supposed to be taxed at 40%,
Mm-hmm.
and your employer continue taxing you at 20%.
I
And in some
see.
cases as well, it is not usually the employer's fault.
Because the employer
So
doesn't know you're earning money from your side hustle.
most medical doctors, you have like 3, 4 different employers that you're working with. So
Locums.
employers would not even know that you are doing, aside from them, you are doing like maybe like 10 other employers they're working with. So
Yes.
maybe those other 10 employers, they are not aware as well. And all of them are deducting 20%, 20%. Then at the end of the tax year, your income is say 100,000.
Hang on, Latif. You're describing it like these doctors are in multiple relationships.
But everybody's looking for more money and you also have to go and get the shit and get the money as well.
But apart
So
from work, there are other sources. Sorry to jump in there. Like, so let's say you have a side hustle, you have a shop on Amazon or eBay, or maybe you've got a rental property. Those also count, doesn't it, towards the
yes,
income?
yes, all the income. So the tax return basically it does not look at just your PAYE income.
Yes.
Tax return looks at your total income for the year, personal as an individual.
Okay.
So your income from the UK, from PAYE, from self-employment, rental property, investments, capital
Dividends.
gain,
Yeah.
dividends from your limited companies, income from abroad as well.
What of
All
gift?
what did you say?
What if I get a gift? Let's say I got a gift.
For gift, if I'm gifting you money, then you don't have to pay tax on it. The tax obligation is basically on me. But that is like inheritance tax. I'm sorry.
And
Yes, inheritance tax. You need to know me that that's not
yeah,
clear yet.
that's another
So,
discussion altogether. I know they reduced it to 3,000 or whatever, but let's
yeah.
not go into that. So what you're saying is that they look at me as a whole earning person. They're not looking at me as one job. They're looking at wherever you got income, whether you had a side hustle, you are selling cards, you are selling, you even savings interest sometimes if it's outside an ISA. If you earn above, I think they reduce it to £500 now.
Yeah, there's
Savings
a
interest.
basic rate. There's
Yeah.
one rate, there's a basic rate for
Yeah.
savings as well.
Yeah, it used to be like 1,000. I tracked it from 2016. It's gone from dividend interest, dividend income that is tax free has gone from 5,000 down to 500 or thereabout since 2016. So this is like raising the taxes without raising the taxes. Anyway, so basically, from all you said to me, it means that as a whole, I don't see why. I think like it's losing money not to do a self-assessment. I'd rather do a self-assessment. And I'm not saying that I've done a self-assessment by myself and I've done it with an accountant. And after I did it once by myself, I said, okay, that's enough for me to know that I don't want to do this again, basically, because of the amount of time that goes into it, trying to get it right. And then that pressure, you're worried, oh, if I get something wrong, what happens if I get something wrong my self-assessment? Do I get a penalty? Is HMRC very forgiving?
If you made an error on your self-assessment, and you later determine that an error has been made, there's a window to amend the self-assessment.
Okay, what's that window? How long it is?
Usually it is 1 year from the deadline. So what I mean is the last tax return that we have now, that's 23-24 tax year.
Okay.
Which the deadline is 31st of January 2024.
Yes.
You have up until 31st of January 2025 to amend that tax return.
Okay.
However, after that period, you can still amend, but you won't be able to amend online anymore. So now you have to do paper.
Oh, wow. I mean,
it takes a long time.
To amend it, you have to know. So most times you don't know what you don't know. So most people don't find out they made a mistake till it's too late anyway.
Yeah, if it is HMRC that find out that you made a mistake, so HMRC will most likely charge a penalty. However, HMRC can also be lenient they look at is it intentional? They ask you questions about relating to that, to the mistake, to the circumstances that led to that error, and find if you are to. One thing is certain, if it has led to reduction in the tax that you pay, you surely pay the difference in tax.
Okay.
Exactly. There's nothing you can do about that. Over, if there's a penalty to be paid, then that is when HMRC can look into the circumstances leading to that error, and then they can decide to either offer a suspension of the penalty, whereby they tell you don't have to pay the penalty. However, will be given back or something. So, or in some cases, they can tell you to pay the penalty.
Wow. I'd rather not be in that sort of, I don't need that extra heat or pressure where I'm sort of writing back and forth with brown envelopes knocking at my door daily. Right, okay. Well, let's move on then. So self-assessment is the way, obviously, not to be just for the audience, so that we don't confuse tax relief. If you're claiming tax relief on your professional expenses and it's just simple, and you wanted to log into HMRC website, you can use our guide and do it step by step. Most people will say no. Still, especially if I'm already going to do self-assessment, I'll not do tax relief by myself. I'll do it as part of my self-assessment. So, but that tax relief is different. You can go to HMRC website and fill out the forms, claim it by yourself, as long as it's not more than 2.5 a year.
Just to add, if you be doing tax return in a year, and you have tax relief to claim, then it is better to claim everything on your tax return.
To do it at the same time.
Yeah, so as not to complicate anything. Because you can call HMRC, claim the professional expenses, and at the point of doing your tax return, you might forget that you claimed that money from HMRC, or even HMRC might have reduced your tax. It gets the tax return complicated because now you have to start filling some other things that you might not even be familiar with. So it is better if you want to claim tax relief, expenses, charity, or anything, it is better to claim it, and you'll be doing a tax return, then it is better to claim it to the tax return.
That makes absolute sense. So if you're not going to do tax returns, then you can do your tax relief, but tax return feels like a higher level. Like tax relief is your affairs are simple. Maybe you have one job, it's 50,000 and you don't have any other this, then you can do tax relief. But if things are getting complicated and you're earning above 100,000, or maybe you have other conditions that make you eligible for tax relief, like other sources of it, make you eligible for tax return, like you're a partner in a business, or
I was going to talk about the eligibility for a tax return as well, like just to watch through so that everyone can just know I have to do this, I have to do it.
All right.
First of all, if the expenses that you want to claim against your income, if it is against your PAYE income, if it is less than 2,500, then you can even, it is very much to do it online. You can call HMRC and claim it over the phone.
Oh, okay.
So, but if it is more than 2.5, you have a direct to go and submit a tax return.
Yes.
However, for the self-assessment, if you are self-employed, which some doctors are to their local, and they also PAYE, doing PAYE. If you are self-employed and the money you are earning from the self-employment is more than £1,000 for the year, then you are required to submit a tax return.
Okay.
But if what you earn from the self-employment is just say 500, less than £1,000, you don't need to do tax return.
In a whole year?
In a whole year, for the tax year.
Okay.
In the tax year.
Okay.
So if it is less than £1,000, then you get self-employment allowance. They call it self-employment allowance. So you don't have to pay. You do not have to pay. What's it called? You do not have to pay. You don't have to do
self-assessment.
You don't have to do self-assessment for that. Even if you are doing a self-assessment and you earn maybe for some other reasons you are required to do self-assessment.
Yes.
And you earn less than £1,000 on the self-employment job. You do not need to include it in your tax return.
Okay.
Because it's less than £1,000.
I can tell you for free that most doctors, nurses, healthcare professionals, they will earn more than 1,000 if they do any side hustle. Okay, carry on, please.
And also, if you're a partner, especially a GP partner, then you must, that one you don't have a choice. You must submit the tax return.
Okay.
That. And if you have a property that you rent out, the property in your name. Not the property, you are the owner of the property in your name, not a limited company. Then any money you earn from that property, you are required to declare it as a rental income on your tax return.
Okay.
And also, if you get a tip, maybe one of your patients tipped you, or your partner give you a commission for repairing something, or anything,
Yeah.
tips, commission,
You need to declare it.
you are supposed to declare
Oh
it.
dear. Oh dear.
If you earn any interest from savings,
Yes.
investments, or dividend income,
Yeah.
then you have to do a tax return to declare that income as well.
Okay. Is there an
If,
exception? For instance, if the dividend and the interest came from ISA?
yes, if there's an exemption to the savings interest. If
Yes.
you have like an ISA, maybe lifetime ISA,
Yes.
cash
Cash
ISA,
ISA.
and you're getting
Stock and
interest on
shares
that,
ISA. Yeah.
so those
Because
ones you
those ones are not taxed. They're not
yeah, you
declared.
don't have to.
As long as you don't exceed your £20,000 entry sort of like allowance every year. Okay. So
So you
okay.
don't.
What else? What else? Like
If you are calling income, that is very important.
right.
I know some people have a property in the elsewhere, maybe in Nigeria or Ghana, and
Yeah.
they're getting property income from that. You are
Yes.
required to declare that money in the UK. The good
Is,
thing to that is, okay, I'm not saying you want to
is
say
that is
something.
that is that is that part of the new non-dom tax thing that was done recently?
Because this has already been like that. Foreign income, you are supposed to pay tax on it. However, the good thing about that is there's something called double taxation agreement.
Mm,
So, if, for example, I own a property in Nigeria where I'm getting rental income, and I declare that property to the Nigerian government, I declare
yeah.
the income to the Nigerian government, and I've
Yeah.
paid tax on that income to the Nigerian government.
Yeah.
Then once I get to the UK, if the UK have a double taxation agreement with Nigeria,
Yes.
so I can claim the amount that I have paid to Nigeria as tax. I can use it to reduce the tax I will have to pay on that income in the UK as well.
Oh, I
It's a bit
see.
complex. You don't have to. So if you have such income, I will advise you get a professional
Yeah.
to contact us. Then we can discuss that because when it comes to foreign income, it's usually complex because if I paid, let's say, I paid the equivalent of £1,000 to the Nigerian government, I might not be able to claim the whole of the £1,000. So it's usually very complex. But you are supposed to declare it in the UK and pay tax on it.
When it comes to
Um,
tax, there are some things I would say, there are some things you can do, and there are some things we will call don't try this at home. That is that when they're getting complex, then at that point you need to work with a professional to get things done properly. Okay. All right.
yeah.
So you've mentioned quite a few different classes of people who need to do self-assessment, and it's possible that many of these people don't even know. You mentioned you're self-employed, you're a sole trader, and you earn above £1,000. This is £1,000 before even taking off any tax relief. If you earn revenue of £1,000, then you mentioned partner in a business partnership like a GP partnership or any sort of business anyway. Then you said if you have a total taxable income of more than £150,000 in a tax year, you need to do self-assessment. You also mentioned earlier on, you mentioned capital gains tax. So if you sold or disposed something like a house or shares or whatever, or even if you're buying and flipping things on Amazon, I don't know, you made a lot of money, you have to pay.
That was included.
And you mentioned money from renting out property. You mentioned tips and commission, income from savings, investment, and dividends, especially if they are outside an ISA. And again, foreign income. So that's quite a few reasons to do self-assessment. But I was going to ask you
There's
about
another
one.
thing.
Yeah,
Okay.
okay. Maybe
Yeah,
that's what
the,
you're
the,
jumping
the
into.
important one, child benefits.
Exactly, that's where I was coming because this affects
Yeah.
a lot of professionals.
Yeah.
So is that like
Um,
the high income child benefit charge? Could you tell us a bit
yes.
about that?
Yes, I income child benefit child. So if in the UK, if you have an ILR or you are a British citizen
Yes.
and you have a child, then you are eligible to claim what's called child benefit.
Okay.
So you can talk to you can go online, apply
Mhm.
for it, and get the government to pay you the child benefit. However, for the child benefits, once your income reaches a certain level,
Yes.
then you have to refund either part of the money you've collected or all of the money that you've collected from the government.
Oh there.
So if you're there's something called adjusted net income,
Yes.
basically you just look at your taxable income,
Yes.
deduct pension from it,
Mm-hmm.
your pension contribution, whatever is left. If it is more than £60,000, it used to be 50,000. Last
Okay.
I said it was 50,000.
Okay.
However, if your adjusted net income, that's your total income after pension, if it is 60,000 or more than 60,000, then you will have to pay back the money to HMRC, the child benefits that you received. So for the child benefit, for every £2 above 60,000, you can use the percentage is quite complicated. You use about
Okay.
£1, you return back £1. But basically, once you earn up to £80,000, you return all of the money you collected.
Hang on. This child benefit charge thing in our Money Wise Doctor group, our private group, which some people are in, a lot of people complain about this stuff. And we thought this is a very unfair tax. So I know it's been increased to 60,000, but what this means is that, let's say, for instance, and correct me if I'm wrong, let's say my partner, let's say my wife, if she earns, let's say she earns 49,000 and I earn 49,000, we both earn 98,000, but
Okay.
we're eligible for child benefit and we don't have to pay back anything. But let's say only me is working. Let's say I'm the only, or my wife is working and she earns 61,000. I earn zero. Our family income is still 61,000. But because I'm now in above 60,000, I'm eligible for that child benefit charge. Whereas my neighbor, who earns 49,000 and the partner earns 49,000, earning 98,000, they're not eligible. Is that even
Yeah.
fair?
I understand, but that's just the way the system is. Because that's just the way the system is. As
Yeah.
long as one person is earning above that threshold, then they
Yeah.
have to pay it.
Well, I
Definitely,
appreciate your position. You're an accountant, and your job is, you're not a lawmaker. Your job is not to tell people how to make the laws. And I said the same thing. I said, doctor, healthcare professional in UK, especially if you're an IMG doctor like me, a lot of times you haven't got a lot of time to be fighting or saying this is not fair, this is fair. You want to do your job and you want to provide for your family, and if you can't change the tax system, you need to understand it and figure out how to work for you. I understand this is position of most accountants. Okay, that's an excellent summary. I know it's been you've covered quite a lot already, self-assessment and all that, but there's one big area, unless there's
Okay.
something more you want to add under self-assessment.
For just the child benefit, so you pay back about 1% for every £100 increment on the salary. So
Okay.
sorry, I won't be patient. So for every £100, you pay back 1% of the child.
Every £100 came back 1%. All right. Okay. Now, one big area a lot of doctors ask about is limited companies. I mean,
Okay.
there's been a lot of people. I'll say umbrella and limited company. What are their differences? And we can look at them one by one, because I've seen people had some sad stories with umbrella companies and get burned, especially the umbrella companies that did the loan charge scheme. And a lot of people who didn't understand it suddenly found out years later that they were in trouble with HMRC. So what's the difference in umbrella company, limited company? Are there some umbrella company that are reasonable? Can a doctor or healthcare professional work with a limited company? Obviously, I know the answer to limited company bit. What has been your experience around this?
Yes. For umbrella and limited companies,
Yes.
I will just take them one by one. But before then, I think what even led to umbrella, what I wanted to there's something called IR35.
Yes.
So
Talk about IR35.
Yeah, IR35, in simple terms, as the employer, when you want to employ someone, you are
Yes.
required to carry out the IR35 assessment.
Okay.
So basically, it is just to look at the status of the person's job with you. So
Okay.
when you do the IR35 assessment, it helps determine if the job you are giving to this person, if the person has to do it on a PAYE basis,
Okay.
or it can be on a self-employment basis.
Okay.
Now, if it is on PAYE basis, pretty straightforward. Employer deduct tax and NI from your money, pay you the difference, and that's it.
Okay.
However, there are some employers that for some reason, probably they don't want to the tax aspect or anything, they just want to outsource it or something, then they tell you, oh, we can pay you through an umbrella company.
Oh,
Still PAYE.
oh, okay.
However, the only difference is just that there is now an intermediary between you and the employer.
So that intermediary is the umbrella company.
Exactly.
So the umbrella company, I just
It
think of
looks
a
like the way it's calling
yeah.
the umbrella is the one wet.
What if your umbrella is leaky? If you've got a leaky umbrella company, you're gonna get wet. Remember, our former prime minister did his declared an election when it was raining. He didn't have an umbrella, and he got drenched. If your umbrella is leaking, like those who had like umbrella company that were doing this loan charge scheme, a lot of people got burned in that process.
Yeah, that's cool. So the thing is, for the umbrella company, it is okay for you to get your payment to an umbrella company. One of the advantages is flexibility. For example, if you are getting payment to an umbrella company, if you want to leave the job, you can decide to leave within 1 or 2 weeks notice.
Okay.
However, if it is directly with the employer, there will be okay, you have to do 1 month, 1 month notice, 2 month notice. It does not really apply to umbrella. But when you are getting paid to an umbrella,
Yeah.
you have to be certain that this umbrella is doing the right thing in terms of
Okay.
the tax. As we said earlier, you are the one responsible for the tax.
Yes. Yes.
Because at the end of the day, HMRC will not go to the umbrella.
No.
They will come to you as an individual. However, the IR35 rule has been changed recently. It is the employer now that HMRC will go and meet to say, because you are the one that have done this assessment, why have you paid this person as self-employed or well, that does not say, even that still does not apply to the loan scheme.
Oh, I see.
So okay.
That's why.
Now.
Yeah.
I'm with you. Yeah, I'm with
That's
you.
why employers now are becoming more and more serious about doing the assessment, doing it every year and all that.
Exactly, because they have to ensure that the job you are doing with them is either inside the IR35 or outside. So the responsibility lies with the employer now. So for the umbrella, when there are some umbrella companies that they introduce some schemes with some individuals, whereby they tell you work for us, we pay you twice, we'll pay you one, we call it loan, we pay you another one.
Yeah.
That's what we are declaring. As when you see some medical doctors aiming for the whole year £11,000.
Yeah.
So once you see such umbrella company, my advice is just to run from such.
I mean, it affected plumbers, doctors, taxi drivers. It affected a lot of people because he went to Congress, didn't he? He went to the
the loan scheme. To be honest, it's still something that even as I speak to you, we see how sometimes that we are still corresponding with HMRC, just trying to resolve the loan scheme issue. So once you see someone tell an umbrella telling you we'll pay you loan, we'll pay you this one as a loan, we'll pay you this one as your salary. Just the best things to learn from them, because fine, you are getting the money now.
Yes.
But in the future, HMRC will surely write to you one day and tell you, oh, your employment with so company, this is what we believe that you are in a loan scheme. So you come back and pay the tax. And at that point, you call the umbrella company. Most of them, the company has been dissolved. It's just like a scam scheme.
This is the experience of myself and most doctors. I found out that this company, they're based in Jersey, and many of them cease to exist. And again, like I said, you're in charge of your own financial future. You have to account for it. So HMRC comes knocking.
So for the umbrella, if you find a good umbrella company, it is fine. You can go with them if that's what your employer is proposing and you are okay with the idea. As long as they are deducting the right tax and paying it to HMRC, then you are good. You're fine.
What we found a lot of times, so let's jump in with umbrella companies. I'm not a huge fan. What we found that a lot of times the umbrellas that are supposedly suggested by the employers, they are paying the right tax. What we find a lot of times that you might end up paying more tax actually than PAYE, or sometimes you might pay just about the same tax as PAYE. So for that extra trouble, I'd rather not. I know there's an option of limited company for those who are eligible, who are outside IRO 35. we tend to think, well, it might be best to go with a limited company. So what would you say, limited company versus umbrella company for someone eligible outside IRA 35?
Yeah, if you are eligible to be paid as self-employed, so you don't even need an umbrella company for that.
Exactly.
Your that means the job you are doing is a self-employment job with your employer, and that can be paid either as an individual, that's to you as a self-employed person, or
Okay.
it can be paid to what's it called, to your limited company
Limited
if
company.
you are operating through a limited company. So operating through a limited company, it can be tax efficient as compared to self-employment, because under the limited company there are things there are expenses that you can claim, like your pension. You can be contributing your pension directly from the limited company, like
Yes.
under the salary sacrifice scheme.
Before
You can,
tax.
before tax. In fact, once the money gets to your account, you can be paid every day to the pension provider, as long as it is no more than a 60,000 allowance. So in a salary sacrifice scheme.
Okay.
And also, what the money you earn from the company, limited company, you still have to pay tax. You still have to pay corporation tax.
Yes.
After the corporation tax, whatever is left, you can decide to even invest it directly. Your company can invest in another company, maybe a property company that your company is investing into, buy property with it. And money is there, your money is tied up in the property. And at the end of the day, you can get your rental income limited cost as well. So,
Okay.
however, which is everybody needs the money, even if I'm working for a limited company, you won't just be investing the money.
Yeah.
You can take dividend if you want to
Okay.
take money from the company. If you are
Okay.
taking dividend from the company, then the dividend, it is the tax that you pay on the dividend will be lesser as against when you are doing the job as PAYE, like when
Yes.
you are doing as self-employment.
Yes.
On dividend, you pay depending on your income rate. If your
Yes.
income is no more than 50,270 for the whole year, then you are paying tax at 8.75% after your dividend allowance
Yes.
and dividend. Then anything, if the dividend is above it, if your income is above 50,270, then on the dividend you will be paying tax of about 33.75% on
Yes.
that. And hopefully your income is not, you are not an additional rate earner. If you are, then you're paying tax at about 37 or
It's
39%.
39.35. So basically we've backed into limited company now. So I'm going to ask you some questions as a specialist in that area. So we're talking about limited company. Let's say I'm a GP or I'm a consultant or I'm a doctor, nurse, healthcare professional, whatever is my job. It's been determined I'm outside IRO 35 and it's fine. And I open a limited company and I set it up and then I open a bank account. So my employer pays me into that account every time. So my employer doesn't take away any tax because I'm responsible for the tax. They don't take away any NIN. I'm responsible for it. But I still have to pay tax. So we're looking at the taxes I have to pay now. But before we look at that, what can I deduct? What are my expenses? How do I get money out of this limited company? Because the company is different from me. How do I get money out of that limited company into my account? You mentioned one dividend. We'll come to dividend tax. You mentioned one dividend. How else can I get money out of this
Yeah.
limited company?
Another way is as the director of the limited company, if you do not have another job that you're doing, another PAYE job, then you can place yourself on salary in the company.
Okay,
For the
salary.
salary, in fact, for the salary, you can even, it is not a must that you take 10,000 every month or whatever. You can decide to take even the 12,570, which is the personal allowance. You
Yes,
can decide that that's all you want to take from the company for the year, and you don't have to pay tax. You just pay the national insurance contribution.
yes.
That is feasible on limited company. That's another way you can take out money. The other way you can take out money is expense reimbursement.
Yeah, so number one, you said is basically dividends. Number two, I can pay myself a salary and I can
Uh,
just take £12,570, which is the personal tax allowance, and I
that's
don't
right.
have.
You can take more than that. You
And
can
yeah, but if I take 12,570, I don't pay tax on it. This is the system, right? I did not set it up. Number three, you said expenses. For instance,
that's
my day-to-day expenses in running the business or running the company, I can actually claim it as well. Is that correct?
Yes, you can claim your expenses, but not there are some allowable expenses and some expenses that are not allowable. For example, what can I use as an example? Let's say my cost of feeding,
Yeah.
I can't claim it as an expense because
Okay.
even if I do not have a limited company, if I'm not working,
Yeah.
I still have to. So it is not that you are eating just because you have a limited company. However, your GMC, for example,
I have a question. I know you can claim GMC and cost of feeding I'll feed. But if I eat at home, I don't spend that much. But if I end up having to eat out because I travel to work in Birmingham or London and I have to eat out and I spend a bit more, so I'm incurring that extra expense in carrying out my duties in a limited company. Does that qualify?
I'm saying, okay, does that qualify as an expense?
Yeah, because
Uh,
I've incurred it in carrying out my job.
we have to look at the context of what has happened, what led to this thing happened.
Okay.
Now,
I was hungry.
yeah, so the traveling, basically, the traveling, is it, for example, let's say you had to attend a conference, a
Yes.
GMC conference, for
Yes.
example.
Yes.
It is a must for you to attend that conference for you to be able to do your job.
Yes.
Why, let's say the conference is being held in, let's say, outside the UK, for example.
Yes.
Italy, for example, and
Yes.
it is a must for you to attend to be able to continue to work with that limited company.
Okay.
Now, while you are away on that trip,
Mm-hmm.
the cost of feeding,
Mm-hmm.
it is allowable.
Yeah.
Because you are away on a long trip for
Exactly.
the business. So
Okay.
there's a certain amount, subsistence pay that HMS will allow for that.
Okay.
However, if you are traveling from your house to the place where you have to work, as in the example you gave to Birmingham, you are
Yeah.
traveling to Birmingham to go and work, and you have to eat when you get to work, it is still not allowable.
Okay. Well.
Because it is still a normal daily expense that you have
Daily
to incur.
expense. Right.
It is different from when maybe your employer sends you to from Birmingham now. Your employer now sends you to, let's say, Aberdeen.
Aberdeen. Yeah.
On that journey, you have to incur some expenses, like you have to feed, obviously. You have
Yes.
to stay in an accommodation. It is still relating to your job. Then such expense you can actually claim it, because
Okay.
however there's a limit. You can't
Okay.
just say, oh, because now I can this thing is allowable. Let me spend 200 on my
But
food.
it takes us back to wholly, exclusively, and reasonable.
Exactly.
Yeah, so I can't declare like a buffet or a party and then claim it all my expenses because I can claim. Okay, that's good. So we've got like dividends, and you talked about the dividend tax rates, which are all purely dependent on what kind of taxpayer you are. So you talked about dividend. You said if you collect dividends, you're going to have to pay tax. If you're a zero taxpayer, basically you earn 12,570, you pay nothing on the dividends. If you're a 20% taxpayer, basic tax rate payer, you pay 8.75% on the dividend. If you are a higher tax rate payer, you pay 33.75% on your dividend. And if you're a higher additional tax rate payer, so you're earning above 125k or thereabout, then your dividend tax becomes 39.35%. So we've talked about dividends. Now you talked about expenses. Sorry, you talked about salary, which you said depends on whatever you want to place yourself on salary, but the most tax efficient way is 12,570. That way is tax free. You talked about expenses, which is sort of like expenses. If I pay my accountant for accounting services, so it's an expense that should be allowable.
Yeah, that should even be going directly from your business account.
That should go directly from my business account. Exactly. So if I have to renew my GMC license, MDU license, BMA, I need some equipment for the company, I consult a lawyer, I consult an accountant. Even if I consult a specialist, let's say my business is primary care and I consult a specialist and I have to pay them, I'd imagine those are all allowable expenses in the business.
Yes, usually for the limited company expenses, it is something that you actually need to sit down with a professional, discuss about it. So in case anybody needs advice on that, you can contact us at SSL.
Okay.
We can look at the expenses, take you through expenses that you can claim the company, and how you can do tax efficient on your limited company as well, because there are other tax planning methods, strategies that you can utilize with the limited company as well.
Okay.
So,
I mean, so you're saying limited company is one of those, don't do this at home. Not I'll say I've looked into this, and I'll say you can, as a doctor, if you want to, you can decide to do it yourself.
Yeah,
Or
it is possible,
yeah, you
but
can.
when it's for limited company,
Yeah,
one of the cons of limited company is the administrative aspect of the job.
exactly.
So that's why you actually need a professional for the limited company.
You
It
can.
can
You
be
can. You
better.
can. Yeah, I'll say you can do it by yourself. The same way you can also decide to do surgery on yourself, minor surgery and all that. The problem is that you might read it and watch the video and think you've learned how to do it until you get complications. And
Mm.
I've studied this stuff, but I never do any of it by myself. I invest by myself. I manage my own investment. But when it comes to taxes, when it comes to life insurance, when it comes to mortgage, I'm not gonna do it by myself. I'll work with even some of them you can't really do by yourself. You have to work with an expert in that area. So we've talked about expenses, we've talked about salary, we've talked about dividend, we've talked about obviously yeah, you mentioned pension already. We've already captured that in limited company. Are there some other things? For instance, what if I need an admin? If I have an admin working because of the burdens of dealing with the company, can I pay somebody like a staff or something?
Yes, if you have an admin that is working for you under the limited company, it is possible to claim as well. As long as you have your record and it is reasonable and it's just for the business. So then you can claim that. You can claim that on your account. Usually, if it's normal for HMOs to come and want to know what exactly is going on with the account,
Yes.
as long as you can give them reasonable reasons for why you actually need those expenses and they find it reasonable, necessary for the business,
Yes.
then it's also possible. Because there are some medical doctors that they have an admin person who's the
Yes.
person that basically help them look for job around. They
Yes.
actually in fact, some have like a person that is in charge of their shift.
Yes.
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 That's so busy with work. They don't even have time to for the shift. This person help them discuss with practice,
Negotiate.
negotiate with practice, or this is when they go and book the shift for them. So it's possible to claim those ones as expense as well from your company account.
Wow, you've been through quite a lot of you've described quite a lot of and explained a lot of the UK tax system. Obviously, UK tax system is endless. You can't fit into one book, but I think these are the main highlights. And before we wrap up in the next few minutes, can you tell us what are the commonest tax mistakes you've seen doctors, healthcare professionals, or any other clients you've had to help out? What are the commonest costly mistakes you've seen people make in terms of tax efficiency? I know we've not sort of like gone into everything you can claim in limited company, including an electric car if it's for your job. But
That's what I said earlier.
well,
That
those are very
limited
specialist.
company, you can contact us because it is a lot. It's not something that you just sit down and remember everything at once.
Exactly. Is the kind of thing you need to work with a professional who actually knows what can you really go for and what to avoid. But I want to look in commonest mistakes you've noticed. What are some common errors or blunders, whether it led to HMRC trouble or just people not claiming the right tax or missing out the tax period, and now it's more than 4 years they can't go back and claim again. What are the commonest mistakes you've noticed? Which one comes to mind?
Yeah, I think one of the commonest that I've noticed is one of the commonest one is not keeping records.
Not keeping records. Oh gosh, doctors are
It
bad at
is,
keeping records.
it is very, very important. In fact, it is very important when it
Okay,
comes to your tax.
okay.
You have to keep the record.
Keeping
You
accurate
just have to keep
records.
the record. So anything, if you do a tax return, you do a company account, anything you're using on that, you should have a record for it.
Okay.
And legally, you are required to hold those records for minimum of 5 years.
5 years. Okay.
5 years minimum. So if you can hold it more than that, it is advisable.
Hmm.
So, but keeping the record, because there are some situations where HMRC come and say, "Oh, you want to look into this tax return,
Yeah.
doing this expense. How did you go about? How did you get this? How did you do this?"
Hmm.
And the clients, we can't get the record for such. In such cases, HMRC will most likely disallow. We can still explain to them this is the reason why I don't have this record. However, in most cases, HMRC would want to disqualify those expenses. So not keeping a record is something that if you've not been doing that, then you have to you have to work on that.
That's a big
So
one.
record all the expenses, even
That's
your
a
income.
that's a
You
big
have to
one. Not keeping accurate records. I suppose I'm not the best in keeping records. I'll put up my hands and say that, but we'll find ways to keep records. Like if you try to make your expenses through your card or bank and
Yeah.
avoid cash expenses, and that way there's already a record. Your bank statement is a record, and
Exactly.
yeah, that's what the way I think record. But also, if you make a big expense, like obviously collect a receipt, put it somewhere.
Exactly. You bought an electric car.
Yeah, yeah,
You
you have
can't
to.
claim 40,000 or something like that, but it's just like, oh, I don't have the invoice to pay.
If you're going to claim £40,000 for buying an electric car that you use for your business, there's no way you wouldn't have records. Or you can expect HMRC to be upset if you don't have any records of that.
Yeah.
Yeah.
Now, they just take out that expense and tell you this is the tax you pay on that and the penalty. So,
Is there anything else you can think of, like a mistake or
another thing you mentioned there, yeah, umbrella.
umbrella?
Whatever you do, especially as a medical doctor, be careful with umbrella company. You have
Be
to be very
careful.
careful with that.
Be
In fact,
careful.
any scheme that is telling you about saving tax, I
Yes.
will advise you discuss with your accountant
Yes.
about that scheme before you go into it.
Yes.
This is very important because they might not advertise it to you as a loan scheme. It might not be through your umbrella company. It can just be a random company. Someone coming to meet you. Oh, if you do this, you save this amount of tax. You do this, you do that. So it is better to discuss those scheme with your accountant before you finally make conclusion on going into scheme.
Thank you so much for that. I mean, it's just like a lot of people on internet these days giving people advice and saying you can do this and do that and do this.
You have to be careful with internet advice as well. It's
Be-
also very important.
because the HMRs, when they send you a letter, they will not send it to the internet. They will send it to your house, and you have to explain. You not pay. You not have whoever gave you the advice on the internet. So even when you watch YouTube channels like this, obviously we strive to provide the highest quality, accurate information, and we do that all the time. And we cross check what we do. Obviously, we bring in accountants, specialists, doctors, people who are licensed and they know what they're doing. But no matter what you check, just like you hear something about health, then you go and discuss it with your doctor. Don't run around and do it without actually checking properly. Thank you so much, Latif, for joining us, and thank you for all the fantastic golden nuggets you've dropped in. Before you go, I would ask, what if somebody listening to this thinks, oh gosh, I need to do my self-assessment. I need a proper accountant who can help me. Where do we find you? How can we find you guys?
Yes, we are in Essex, Allo Essex.
Oh, okay.
The company name is AHCSL Accountants Limited. We are in Allo Essex. However, being in Allo Essex does not mean we can't cater for you if you are staying in Aberdeen. We have several clients that are all yes, most of our clients that we've never seen them, they've never seen us.
Yeah.
We just talk over the phone, and we have a patient team that are available to deal with your tax. We're a team of we have a very large number of accountants that are ready to deal with your tax and to advise you. And we are an accountant. That's one thing that we strive at is the customer communication with our customer.
Yes.
If you need an accountant now and you give us a call, we won't tell you, Latif, he's not available today. We'll call you next week. No, Latif will be available for you. We'll assign you all these people to be available for you immediately. We create time for our clients, irrespective of the number of clients we have. We try to make sure every client feels important and they understand that we are actually working for them.
I think that's big.
It is our clients that are keeping us in this place, so we are actually working for them. And anywhere you are in the UK, you can contact us for tax.
That's a big. That's very reassuring because sometimes you get all those scary letters, and then from my experience, if you pick up the call and someone is at the other end and pick up the phone and tell you, "Don't worry, this is what we're gonna do," and yeah, it's very reassuring. It's just like calling your doctor and saying, "I'm noticing blood in so and so. Is it cancer?" And then your doctor can say, "Well, before we go that way, let's do this, let's do that," and it's usually hugely reassuring. Thank you for all the work you do and how much you're helping doctors and healthcare professionals like me.
And also, you can just check our website. So our website is acsl.co.uk.
Okay.
AACSL
.co.
.co.uk.
We'll put it on the
Yeah.
screen, aacsl.co.uk. So anyone who wants
So
to
in the
check you
chat
out.
box there, you can chat us up, and there's our phone number is there. You
Oh,
can
okay.
ring us at any time. If you can send the chat box, if it is night, send the chat box. First thing in the morning, you get your phone number and give you a call immediately to discuss a tax issue with you.
That's
So
very,
we
very
are always
impressive.
available.
That is very, very impressive. Well done for all the work you're doing and your team. And hopefully, we should have you back if there are things that come up. If you're here and you're listening, you're in the comments, and you've got some things you want to be clarified. Yeah, this is an accountant. This is what they do day to day. You can ask your questions in the comment box. We can get them back to come and answer your questions. And if it's things that we've dealt with in the past, we'll point you towards it. And if there are areas that you like us to cover on the Money Wise Doctor podcast, whether it's related to tax or investment for doctors or life insurance or different stuff, basically. If you comment in the YouTube comment, then we will do our best to deal with it in a way that is, it will help you to take charge of your finances. But other than that, thank you for joining us today, and have a fantastic evening. Bye bye.
Thanks so much. Thank you.